Afternoon, I welcome you to today's hot topic webinar here together with Admirals. It's Wednesday, it's the 11th of May 2022, and today we want to look at the differences between pros and amateurs in trading. And in fact, there are a few more, let's say, differences between amateurs and pro traders. That's why we have two parts. The second part we will talk about then in 2 weeks from now at the 25th of May. And today we want to have a look at the first 5 main differences, and I want to give you some insights into these. If you watch this now on YouTube, the recording, then please subscribe to the YouTube channel. Also set a reminder that you don't miss any of the webinars which we are producing here for you. It's not just me holding webinars, but also my colleagues Paul and Marcus every morning here with his morning show and his setups in this case. So if you have any questions, please feel free. Also, for those watching the recording now, post them below the video. Leave a thumb up here if you enjoy what you will witness in the upcoming minutes. For those watching this live now here and who have registered via the website admiralmarkets.com, please also feel free to use the chat box here, ask all your questions. And that's it around the introduction, in fact. So let me just share my screen right here. So probably before we start, and you're probably glued to the screen, let's say, right now after the inflation print. I'm surprised, to be honest. So we expected a print of 8.1% year on year for the month of April. Numbers came in at 8.3, so above expectation, which is not such a big deal. I mean, in April, we saw a print for March at 8.5%, so we are a little topping out. But markets, I think, expected a print below, significantly below 8.5%, around 8.1%. I have to admit, I was of the opinion that we're probably coming in even below 8, which is kind of a psychological level. Well, yeah, markets were surprised. I was surprised. I'm not positioned right now. Wanted to wait until the numbers came in and then see how the market reacts. Well, numbers came in now above expectation and markets are selling off again, respectively coming into support. Let's see what we get to see. This is true for equities, especially. Probably you've also Bitcoin on your screen. You probably see the 30,000 USD mark right now breaking. Which is kind of a catastrophe for especially Coinbase today after yesterday's earnings, after markets closed. So numbers came in, especially guidance came in below expectation. I'm showing that the numbers, or that the revenue, respectively trading volume, is dropping right now, and MTUs, monthly transacting users, is also topping out, respectively how much they trade, especially in terms of the trading volume. And then we also know that the stock of Coinbase here, Coin, is highly positively correlated to Bitcoin. Highly positively correlated means if Bitcoin goes down, Bitcoin Coin should follow suit, and that's not a very good environment for the stock right now. Stock is dropping below 60, if I'm not mistaken. The pre-market, I've seen that, and probably this is a stock which is also very hot today, and something to keep in mind. But that's it around the current market conditions and then where we stand. Before we head over to the US equity markets, then first of all have to learn about the differences between pros and amateurs in this case in trading. And the broker behind this webinar series, before we start with today's agenda, is some Admiral Markets in this industry for over 20 years now, offering over 8,000 financial instruments and with a global presence with support in local languages. By the way, let me just here take out the I, that's a little wrong. And fully regulated by several regulatory bodies like the CISAC, like the FCA in the UK, like the ASIC. Also, most recently, in the last month, there was a new regulatory body which is overseeing the business from Admirals, was added here in Jordan. All information around that can be found on the website. Also, what this means for your trading if you plan to open an account under this regulatory body. very competitive offering when it comes especially to the DAX. So I'm located in Berlin in Germany, and I can say that we here in Germany usually refer to Admirals as a DAX expert, a very competitive offering with 1 point spread, very quick, very fast order execution, very reliable and stable trading platform, MT4, MT5. So please feel free to check out the website for further information about Admirals here as a broker, and download the demo and then take it from there and witness this trading experience yourself. So there's a slogan: one world, one broker. Again, global presence around the globe, and high chance that you will reach out to Admiral's customer support and talk to someone in a native language. That's noteworthy. I'm a former bank clerk, so it's years ago, 20 years nearly. But still, when we had clients from all over the world, and they were native in German, they were very, very comfortable, or felt really comfortable when they talked to someone in their native language in financial related or around financial related topics. So this is definitely something to keep in mind, and why, especially with a broker, having a global presence here is definitely worth a deeper look here from your end. So, and now we want to jump into today's topic here and give an agenda, an idea of what we will talk about. So today we will talk about discipline. Well, surprise, surprise. So that a successful trader is very disciplined. That's probably something you have already known or found out yourself, following the rules. But in depth, what this means is something we want to keep an eye on. And also patience, self-confidence, self-dependence, and being humble. These are the topics we want to talk about. Again, these are the first 5 key differences between pro traders and amateur traders. We want to talk about the second 5. So it's 10 as a whole, what we are covering here. These will be the topic then in the upcoming event in 2 weeks from now. And let's just straight away jump into the action and have a look here at character trait number 1, and key difference between pro traders and amateur traders. It's discipline. It's also here you can see it with the picture. It's the focus, really, to know what you're watching for. So it's in fact, as I pointed out here with the bold and capital letters, it's the main difference between successful and unsuccessful traders, respectively, between professional and amateur traders. So in case of a professional trader, so I mean, it doesn't mean that a retail trader or amateur trader is not disciplined, but the key difference here is really that discipline in this context means more than just sitting in front of the screen every day, but also executing on your plan flawlessly, and really focus on following your plan every day. So it's a small difference probably between a professional and an amateur trader, but still it's one of the key differences, and it's one which the professional trader follows consistently. So it's something which is sometimes a little misunderstood. So some people say, well, character trait or discipline as a difference. I'm really disciplined myself. So in certain areas of my life, so going to the gym, I don't know, 3 times a week, or I'm working out, having a clear plan I follow in my daily life. So something which is already showing that I'm capable of following this. But it's not just being capable of doing that, but doing this really consistently, and really know that you're capable of doing this. And this is the main difference. In fact, it's not that much of a difference between a successful or respectively professional and the retail respectively amateur trader. In this case, not necessarily retail trader, because there's also professional retail traders who are highly successful and making lots of money, but those who currently lack the success in their trading, it's due to mainly a lack of discipline and a lack of consistency in their overall doing. And so in case of the disciplined trader, as you can see here, so first of all, he focuses 100% on following his plan, but he's also aware of where his edge is and how to continuously capitalize on this edge. He knows the advantage he has in the market. And so the main reason why the successful, especially the professional trader, the one who's making his money, his making ends meet here, in case of trading, is that he knows that a lack of discipline and not executing well on his formulated plan here will cost him a lot of money, because he's already he's seeing that the success in his business and his trading, after all, comes out of executing based on his plan and the rising equity curve, and thus he consequently avoids in this context to not execute on his plan and not being disciplined. So it might be that he doesn't feel well for the day. So in the morning, for example, when I was in Marcus event, I told you here, I showed this ring here, this Oura ring, and I said, well, my app just told me that I'm doing fine. Usually you don't necessarily need a Oura ring, or you don't necessarily need an app telling you that you're feeling well or that you slept well, because you can already feel that. But the thing is that such an app, for example, tracking your sleep here, for example, is giving you more confidence in believe what you feel, let's say. So sometimes you just feel very good, for whatever reason. But for example, the ring is telling you, well, or the app, or however, is telling you, well, you haven't slept well. So this is something you should keep in mind, and where, for example, trading journal comes into play, and where you should write down these occurrences where you just don't feel it for the day. And this being said means, well, you just take a step back. You just say, well, you know what? I don't trade today. That doesn't necessarily mean that you're not disciplined, but in fact, you're really disciplined, because first of all, you're writing down each day and how you feel in your trading journal. So this alone is a sign of discipline, because you're writing this not just only when a day went in your direction and you made money on the day, but also you write it down once you didn't feel comfortable doing that, respectively lost money on your trades, and so on and so forth. But in addition to that, it also gives you a better understanding of where you currently stand. And then you say, well, I don't feel well for today. It's will potentially affect my trading in a negative way. And that being said, will probably will result in me not executing well on the plan. So that I'm disciplined, I'm here, yes, but I'm not capable of executing well and in a disciplined manner. So that being said, is something which a professional trader, successful trader, is aware of, because he knows once he is not disciplined, respectively, is not following his plan, this will likely cost him money, because it has a so-called negative expectancy, so a negative expected value in this case. And this is something, well, if you're already aware of that, well, then you avoid this. If you feel you find it out during your performance in trading, for example, that you're not performing well, then you start, in this case, to find answers to the question, why didn't I perform well? Why didn't I execute well on the day? And then once you realize that it was due to a lack of discipline, which was triggered by not having a good sleep the night before, or not having not having had a good meal, for example, or not being good hydrated enough, let's say, and having drinking enough here for the day. whatever it is, you address this and then you move on and you try to build based on this experience you just made and to be capable to execute the best possible way in a very disciplined manner then after that. And this is one key difference between, in fact, a professional successful trader and the not so successful traders. There's also something which is bringing here the second character trait, the second main difference between successful professional traders and retail traders into play, or respectively amateur traders, those who are not yet successful. It's the patience, in fact, which is in fact key to successful trading. You've probably heard this. So like wait for your setup, wait for your spot, and then execute on the spot. So you see that that there's a fine line, let's say, between discipline, the first character trait, and then the second one here being patient. So in case of a professional trader, in this case, a successful one, you realize that you have usually a clearly predefined exit, respectively entry and exit plan you execute on, and a clear procedure you follow really religiously in this case, and wait for patiently. The thing is, like, how do you get to the point to wait patiently? What avoids, or what helps you to avoid to just click once you think you feel you've seen something? Well, a clear predefined game plan. So like, for example, you have heard about this, and we probably made it a topic in earlier webinars, like that if you automate your trading, if you let strategies being executed in an automated way, for example, in the MT4, MT5 via an expert advisor, for example, like via an automation of your trading, that this takes out the emotions in your trading. But this is something which is not for everyone, let's say, or let's put it that way, that you might say, well, you know, I'm more the discretionary guy. I need to see it, and then I want to execute on this. So and I think most of the people are most likely discretionary traders in this case. So how can you become let's say an automated trader, or executing similar to the automated strategies you're executing via an expert advisor? It results out of the fact that you have a clearly predefined plan and really visualize what you want to see and then how to execute on this. So that means you really have to sit down and prepare for the day, and then being capable of really executing on your plan, which once you wait for them and you execute on them will result in an overall positive expectancy here, which means like you will see over time a rising equity curve, because it's the right decision you take based on the predefined levels you're watching. So let's put this, let's look at this here from a classic example. So I think I learned this over time, that there are many people out there. We're not sitting down, let's say 1.5 to 2 hours before the trading day starts, and then execute on a plan they've written down. But it's more like what they do is they just jump right into the action. So what they do is like they start their laptop. They open the trading platform. That's like 5 minutes before the trading day starts, and then they just execute. Like, okay, I see, well, DAX is today long, I go long. Or they now in the US equity markets, for example, let me just have a look here, something like that. So US inflation numbers, I thought they come in below expectation, thus being bullish, because it means something like the Fed will probably hike rates not as fast as expected, which is potentially bullish because it means more liquidity for equity markets. Thus, it should be bullish. Now they come in above expectation, markets react bearish. So I'm watching the market and I'm shorting it. So the thing about this is it's not detailed enough, let's say. So it's not enough to just open the chart and then look at the chart and say, yeah, higher highs, higher lows, and then I execute because of this and that. But you really have to know what you're doing. You really have to understand the overall context and why a stock in my case mainly should be hot for the day, respectively why an index should move in one or the other direction. That's probably based on, for example, the volatility level we're currently seeing, the VIX, which is trading significantly above 20 points, respectively above 30 points, in fact. So having all this and having this information available brings you in a very comfortable spot, because you know what you're looking for, which levels are of interest, and you write down like these are the pre-market levels, or these are the yesterday's highs, yesterday's lows, or something like that. These are the support levels overall where the market might find support, respectively might find resistance on the upside. What's the current volatility level? So in this case, we also had a webinar in the recent past about the average to range, for example. So what's the market you're watching here is doing in terms of volatility on the upside, on the downside? What can you expect? Or put it differently, if we now see, for example, a move like a break above a certain significant level, and you then watch the average to range, is there still enough, let's say, meat on the bone you can capitalize on? Or has the market already moved that much that we probably will top out here in this area, probably close above this resistance zone, but the next push higher will probably happen the day after, so tomorrow, for example, and today there will be kind of like a consolidation above that level, but no further bullishness, for example, should be expected, or vice versa. However you put this, you can already see that you have plenty of information to be available, and write it down, and then based on the information really formulate a plan. So if this happens, then I will do this and that. If this happens, then I will do this and that. And then really take it from there. And this is, by the way, also something which I have to do, by the way, right now. So I have to write down some key components for my trading. So once we finish this webinar now, and I will focus on two stocks here today. So it will be Unity, so Unity Software, it's U, respectively. I will focus on coin, and these are the two stocks I will most likely trade after yesterday's earnings, especially. So in case of coin and the correlation here in terms of or towards Bitcoin, you will already see that with the break below 30,000, which will likely happen in Bitcoin right now. Oh, I'm sorry. This is something which is of interest for me, but still I have to see whether certain criteria is met to do or trade a certain strategy, for example. So in case, for example, of like I'm playing an opening drive, like right from the opening, which won't happen today because I'm sitting here in the webinar, but therefore, for example, I need to see a pre-market volume of the average daily trading volume of more than 50%. So that means like if there's on average 10 million shares being traded in the stock, and then I say, well, if 5 million shares are traded here in a pre-market, probably even above that, then I see a very hot stock. And that's one of the reasons why I think that right into the open, there might be lots of action taking place. This is, for example, one way how to prepare well. If this is not given, and probably, or not just probably, but most likely, I would just skip this setup here and focus on other setups, but have a clear bias on the other hand, saying, okay, if this happens, then I will do this and that. If this level is broken, so right now we are opening around new all-time lows, well, then obviously I will look for short engagements, but still I'm probably not shorting right into a strong bearish opening drive, but I want to see kind of a consolidation or a failed attempt to recapture the volume weighted average price, whatever. So, but I clearly write down what I want to see. So I have a clear game plan I follow on. If I prepare that way, and it takes some time, certainly. So it's 2 hours again before the market opens. But if I see or if I know that this is currently here taking place, well, or which levels to watch and how to act on them, then this is something which gives me the edge I need to not just execute well for myself, but also to be better prepared than other market participants trading with me around this time, obviously, and are interested in this case, this and that stock XYZ. So this is bringing us here on the point of focus, or not focus, patience. If I know what I have to wait for, if I know which levels to watch, it's easier for me then to stay patient. Also, in terms of visualization, for example. So I think this picture here in this case, and it's no coincidence. So this is probably a picture you will sometimes see when it comes to meditation and visualization techniques, for example. So in my case, it is, for example, that I sit down and that I visualize a trade before I trade it, in fact. So meditation, I take 10-15 minutes before my trading day starts, then to be well prepared. The great thing about this is, and this is something you will find out if you dig a little deeper into how our brain works and functions, it can't really differentiate between doing the real trade and visualize the trade. This is beautiful because you can really trade the trade before you take the trade, or you can take the trade before you take the trade. That sounds ridiculous initially, but you will find it out yourself. Once you watch, for example, a horror film or something like that, you will sit there and just be scared, and just sometimes really afraid of that there's really the murderer or the butcher with the big knife in the kitchen, which is not the case. You know that, but your brain can't really differentiate between what you see in TV and then understand that this is just pure fiction. It's not reality. The same is true for trading. You can use this in this case and really visualize then the trade before you take it, and use this really as a game plan to really then not just wait for the spot, but then also execute flawlessly. So you can see that the first and the second character trait here in this case play hand in hand, and play together. Let's have a look at character trait number 3. So successful traders are self-confident. Don't misunderstand this self-confidence, and don't mix it up with being arrogant here in this case. Let me just see, by the way. Can you see my camera? Can you see it? Because I just saw what's happening here. Oh, that's interesting. Okay, perfect. Okay, I just clicked here on a wrong button, but everything's fine. Okay, everyone can see me. Okay, that's great. So don't mix up self-confidence with arrogance here. It's very, very important to understand that this is not the same. You are confident and you know what you do well and you know where your weaknesses are. Knowing that doesn't make you arrogant, but it makes you self-confident. This is a big difference, and something which brings us straight and directly to the point when I say the most successful traders have no ego. Well, certainly they have an ego, but they have an ego in terms of their presence or who they are, what they are capable of doing. But once the market comes and tells them, well, I'm not long today, or I'm not short today, let's take a look back now today on Coinbase and the stock. So I have a strong short bias. I don't want to be long the stock. I'm looking for short engagements. If the market shows me, hey, I'm not short today, so nice that you think we're short. You have plenty of reasons and you have many checks in your favor. But just assume, or just think about, you see an initial flush lower, and then you see such a V occurring in the chart, and the market pushes back, the stock pushes back and holds then above this volume weighted average price, for example. That's not a clear short signal. In fact, it's more kind of like probably we will see a sharper bounce now. Probably it was only a fake out. Probably it goes hand in hand with the sharp bounce in Bitcoin happening after the flush below 30,000 that we are pushing back. Not really sure whether that will happen or not, but still, I follow the price action and I follow what the market tells me. So this is what I mean if I talk about or if I say markets or traders don't have an ego in this context. Let me just see here what's going on there. Okay, yeah. So let me just see. So it seems as if there was an issue in the background here, not my laptop, but at the laptop here from Nastya. So yes, everything fine. So Successful traders, let's come to corrector trait number 3. Successful traders know themselves really well, and they know their strengths and they know their weaknesses in and out. They know once they perform good, once they don't perform good. I take every chance I have to really realize once I'm at the top of my game and once I'm not. So for example, 2 weeks ago, I told this in the morning together with Marcus, and coming back to the app now. Some people think, okay, well, nice. It's like this Oura ring and tracking the sleep and everything cool, but is it really trading related? Oh yes, it is. In my case, at least, because it tells me, well, did I sleep well? Well, I know this, I feel this, but also for yesterday, for example, I just like in the morning, it was like, did I really sleep well? It was okay, but then I realized I was really at the top of my game. So it was like I had some trouble getting up, but once I got up, it's like I really felt like I could yeah, conquer the world, let's say. So that wasn't straight away accessible, or respectively I couldn't really see it or feel it, but then I took on momentum, and then I realized, okay, that's a great day. And it was underlined via the app, for example. The app also tells me, for example, once I probably haven't slept that well, respectively I shouldn't trade. It tells me that straight away, also in terms of should I go to the gym or something like that. Again, you feel that, you see that, but it's like it's like a second voice, a voice which is not interested in your overall feelings and in your emotions, telling you, well, today is not your day, or is not after some other stuff, let's say, by telling you, yeah, you're the greatest guy on the planet. And so it's just telling you, well, based on the data I received from this ring, well, probably it's your day today. And so knowing this underlines once you feel good, and respectively, once you can build on your strengths, respectively, once you should listen to your body in this case, and once we should realize, okay, I'm probably today I'm not performing that well, and that helps you then really to understand, where are my strengths, how can I perform good, respectively, where are my weaknesses. And this is like also directly guiding us, for example, to knowing yourself in terms of a professional, successful trader, to trade a strategy which perfectly fits your overall, yeah, not just personality, but also your cognitive strengths, for example. So like right now, for example, I'm focused here on the webinar, but I know that I'm also capable of executing quickly around the market opening, for example, right at market opening. But therefore, I have to have had a meditation, really visualize the trades, be really focused on the day, have like chilling music on my ears, and I really have to be focused and in my zone. So I'm not in my zone right now. So I know I won't execute well right now in this webinar. If we open the trading platform and you say, Jens, now trade the open in, let's say, coin, or trade the open in Unity, I wouldn't be capable of doing that. I know I could do this, but therefore I need certain checks to be, let's say, in my favor, and to be capable to execute at my highest possible level. I still think I have an edge in the respective stock, for example, for today, given all the numbers, respectively parameters I already collected and wrote down, and based on that, I know that this and that level is a level to watch and to trade based on this and that indication, for example. But it's another strategy. So this is something I know what I need to have to execute right around the market opening, and then with some, let's say, delay after we finish the webinar now, then execute on the stock in a good way, so to be capable really of getting the most out of the trade, and let's say what I deserve in this case. But therefore, coming back to here, the character trait number 3, you really have to know yourself. You really have to know what are my strengths and what do I need to have seen, or where do I have to stand, and where do I have to be in my zone in this case to execute as good as possible. And so this is also now bringing us to something which is also very interesting. If someone is not asking me like a question, trading related question on what do you think about this approach? What do you think about this trading strategy? I'm not giving, let's say, unquestioned advices. So it's like, I'm really happy to help, but I would never, ever, ever, ever go to someone and tell him, well, this is not going to work, or what you're doing here is completely wrong. Because I know everyone has his own way to deal with the markets, his own cognitive strengths, respectively, and overall strengths as the person, but also weaknesses, and executes on them as good as possible. And I don't know them. You can't really see them by just looking someone straight into the face, or I don't know, answering here in a forum or social media, wherever, where someone might give some insights into his trading. Sometimes, well, you probably have an opinion, cool, but I, in my case, for example, keep my opinion to myself, because I know that most of the time, I just don't have enough information to tell someone this is going to work or not. Still, I'm happy to help. Again, if you come to me and ask me, hey, do you think this works or this doesn't work, or what do you think of this and that way to deal with the market, and so on. So, well, I'm more than happy to help and give an idea of why this could work, why it probably would work if I would do it that way. But if it's unquestioned, I would never ever give an advice, because I know there's too much individuality in this case when it comes to trading and the approach everyone is having here, or going after and finding its way in the markets. Then there's also one very important aspect. It's self-dependency, in this case, corrective trade number 4. So successful traders, and there's no question about that in my personal opinion, are 100% self-dependent. So they are 100% responsible for their winning trades, and they're 100% responsible for their losing trades, and they don't complain. You will never ever, a successful trader, complain about, oh, I had another losing day. And it's like successful traders are they have something which we usually refer to as a growth mindset. There's a great book about this mindset. It's from Carol Dweck. I highly recommend this book. And it's like they see even the losing trade, especially those, as a potential learning opportunity here. And so that being said, they know they're self-dependent. They are responsible for what happens and how they execute. So if they see the equity curve rising, it's because they executed well or they got lucky. At the end of the day, you have to find out whether that was pure luck or if it really was skill, based on which you see the winning trade. The same is also true when it comes to losing trades. And that's one thing why I personally think that, especially in the current environment in which we find ourselves in our daily lives and the current overall world we find ourselves, traders sometimes have trouble because they don't understand why someone plans to tell them what is good for them and what's not, and what they have to do and what they shouldn't. So traders are not really good, or especially me in this case. So I'm not really good at taking these unquestioned advices, because I think, well, I'm fine. So I can think myself. I'm self-dependent. I'm self-dependent in how I make my money, and I'm also self-dependent when it comes to question XYZ. Might be on this and that societal topic, or how to eat well, or how to work out. So if I have a question, I will ask the question, but it's not that I prefer these unquestioned advices. And this is something which is common for traders in general. So this is a character trait, and something where I say, well, if I perform well, it's because I prepared well for the day and I executed well on my predefined plan in this case. And I wait for my spot. This is the third bullet point here. I wait patiently for my spot, the signal, and then I will execute on it. And if I don't see it, well, I can still actively influence here in this case when or where to find my spot. I'm capable of influencing what I can influence, in this case, how much I risk on the trade, how I manage my trade, how long I let the trade run if it moves in my direction. But rather, or respectively, all in all, I'm 100% responsible for what happens. And this is one of the key differences between successful and not so successful traders in this case. And then we have the fifth character trait here. It's humbleness. So it's successful traders are really humble, or at least in my personal opinion, which means it. Well, we just accept what the market gives to us. So sometimes the market is willing to give us not just favorable market conditions, but also say, well, you performed well, you executed well, so this is your present. So this is what I give to you. And well, then you just accept this. You say thank you, and then take it one step further, and or respectively not was one step further, but saying in this case, well, let's now move on and execute once again on the best possible way. And in this context, it's very important also that successful traders, they don't personalize losses. So what they do instead is they fully accept these losses as part of the trading business, and it's nothing personal again. So it's like it's part of the game. So if you want to win, you have to be a good loser, in fact, when it comes to trading. So it's not about the big winners, but these are just a product of your good decision making process and then the overall process. But you can only see those gains in your equity curve. You can only see them if you're capable of accepting the predefined loss levels you set yourself and kept your losses small. If you keep them small, the big winners, rather sooner or later, they will happen. The big move in your direction will follow. And if you execute consistently on those setups and you see those gains, then the small losses won't eat your gains, and you see your equity curve rising in this case. And this is bringing us then to the point. So it's like really executing the best possible way on your overall process. It's a natural result out of your overall being, let's say. And so that brings us to the point that successful traders, those who are really successful, are not just very humble, but they just don't brag with their winning trades. I never met a successful trader. I met plenty of them, but they just don't brag with them because they know everything the market gives to them, the market can take away from them once again. So certainly they can make sure to cut these losses small, but they still they are humble. It's not that they're don't happy about seeing a winning trade or something, but it's more like they understand that this is part of an overall process, and they should stay humble in this context. Again, they thank the market for the opportunity. They thank the market that the opportunity was there, that they were capable of executing well, and that the market let them execute well on their strategy, and then they move on. And they don't post a selfie on Instagram like with a helicopter or Lamborghini, and then with I don't know, a nice woman here and I'm showing the big money and telling the world, look at me, how well I performed. It's usually not a sign of being a successful trader, because especially successful traders don't have time for this. They wanna execute better next time, not just executing better, but in addition to that, they also want to make sure that they're getting paid for following a great process and a growth process here in their trading in general. They don't have time to take pictures, in fact. And yeah, so that's it around the first 5 character traits here. Main differences between successful professional traders and amateur traders. And this is the summary again. So successful traders, we learned, are disciplined. Successful traders are patient. Successful traders are self-confident and trade a strategy which suits their character and personality, but also, this is probably something I should add here, but also which suits the overall market conditions. So very important. Successful traders are self-dependent, and successful traders are humble. And the next 5 traits will follow 2 weeks from now. Yeah, again, if you enjoyed what you've seen, then subscribe to the YouTube channel here. Leave a thumb up here. Please also comment in the chat box below. Are there character traits I missed on? Probably you will hear about them the next in the next webinar. But just let me know. Probably I can work on the next presentation. Also, feel free to reach out to Admirals directly if you have any questions about upcoming webinars, about the product being offered by Admirals. Feel free to reach out to their customer support. Set a reminder, respectively. First of all, subscribe to the YouTube channel. Set a reminder here on YouTube. Also leave a thumb up, then a like. I think it is on Facebook. I'm not that active there. Fully regulated broker. So here's the risk disclaimer. Please read it carefully. Be aware that there's risks involved when trading the markets, and talk to you again then next week, first of all, on Friday, and then in 2 weeks with the second 5 character traits of successful professional traders. And that's it from my end. So all the best. Happy trading. Watch your stops. See you. Bye-bye.